Welcome, everyone. It's Friday, April 12th, and we're here with office hours for Traders Post. What a great day. Today should be considered a milestone in time because we have both co founders here for Traders Post on the stream, Jonathan Rage and Mike Christensen. Round of applause, everybody, for co founders. Round of applause. Very happy to see them. We figured, hey, John's always in the chat, and it just occurred to us in the last meeting, like, why is John not inside of the meetings? Of course he can come. We're going to let him out of the engineering coal furnace, and he can come and answer a few questions to help people out. So thank you very much for giving us a few minutes of your time. This is where you do your speech, John, of saying yes, you're very happy for everybody to see you and praise you.
I'm glad to be here. I can come out of my cave, take my hands off the keyboard, and stop coding for a little while.
There's definitely no one better to answer some of the technical questions that we get on the Traders Post side of things than John. Of course, for a little background, this is John's baby. Founded it on his own in 2021 after discovering this opportunity kind of in his own approach in markets. And John, I'm happy to let you take the reins on telling the story again if you'd like. But there's no one who's committed more lines of code to Traders Post than John. So he is the man when it comes to how the system works.
Appreciate that.
That's
yeah,
right.
I mean, I can give a little background if you want.
Please, for sure.
Yeah, so Traders Post was originally kind of born just as like a personal pet project. It was something I used for my own trading and had accumulated kind of a lot of different components that were later put together to create Traders Post. But like I remember, I mean, this was over 10 years ago by now, where I had created integrations with a few brokers to basically download my order history, and I was running my own analytics and reports, and that gave me kind of the initial connection to some of the brokers, and over the years expanded those connections to support creating orders, canceling orders. And once TradingView kind of came out with webhooks for alerts, that's when I kind of realized I could kind of connect these two pieces together. Spent a few years using that for my own trading, and then realized other people might want to use this. And I was a part of a trading community named Real Life Trading. And that's where I kind of got my first 20 to 30 customers within that community, and discovered that other people were begging me to take their money to let them use the software. And 3 years later, we've got Tom, we got Mike, and we got a couple engineers, and we're having fun building this product for other people.
I got to ask you the question that people ask me all the time, and I'm sure Mike, you get it too. They say, "Well, if you're so smart and so good, and you can make these things, why would you spend your time building a service or selling anything to other retail investors? Shouldn't you spend all your time creating strategies in order to become a billionaire?"
Well, my specialty, I'm a systems and software engineer by trade. I wasn't in finance or trading to begin with. I got into trading afterwards. So my passion has always been in building products and working with teams and building software that other people use. So there's more to, why you choose to do things than just like maximizing the amount of money you make. Like, I get a lot of joy working with Mike and you guys and building the product. I want to see people. I want to interact with people. I am an introvert, but I do need some kind of connection, and I like to get that connection via, building tech and building products. And I also enjoy trading the markets and investing and managing my own money. So it's the best of both worlds.
Yeah,
I find it fascinating. Sorry, go ahead.
Oh, I was just going to say I would echo that. I've built two companies prior to joining Traders Post as kind of a late co-founder, and there's nothing more informative than that experience, in managing people and building a sales pipeline and a marketing strategy and a go-to-marketing strategy, analyzing your customers, improving the product, listening to feedback. There's this ongoing quest to learn more. If you're hungry for information. There's no better path than taking on the challenge of a startup. That said, why not do both? I'm still managing my own money, and I have, effectively a family office fund of a pool of funds that I'm managing, and I do that in an automated way at the same time. So you can do both, but to John's point, it's not all about the quest of just getting the highest number in your bank account possible. There's a lot to achieve in your life.
And frankly, for myself, like I need income in order to fund my failing strategies. I mean, that's why I code. I got to keep bailing the water out of the out of the boat, which is fun. Too fun for me.
I've been there, Tom. I know what you mean. I'm still there from time to time.
All right, folks. So as we do every Friday, we love to answer your questions that we receive during the week or that you sent to us to ask on the show. We want to make sure that TradersPost becomes the best automated trading platform for you to use in order to run your algorithmic trading strategies. I mean, I'm saying that we want to become the best, but frankly, I've seen our competitors and they really don't hold a candle. You show me their Discord group where they have their CEO and they're answering every freaking question that shows up faster than the support team can even get to it. And I'll show you, well, I'll show you second best. They're going to be second best all the time.
I feel like you have some substance behind this, Tom, too, because you were making some integrations even prior to joining TradersPost, right? Weren't you handling client requests for automated strategies there?
Yeah, I'm sort of like John at the beginning of the story where I was so tired of losing money. I was like, why am I losing money constantly? I'm a programmer. I should be able to figure out what's going on. And then I started creating PineScripts on TradingView platform in order just to surface information to help reveal the poor decisions I was making. And then people were like, hey, can you make something for me? Can you make something for me? And then all of a sudden, I was doing that like regularly, and I was able to quit what I was doing before in order to do that. And it's just so satisfying. Like I understand, John, what you're saying, creating these tools that are they're your babies, and then that they can be useful to other people as well, adds validation to what you're doing and purpose to constantly improving what you're doing. Plus, you have this accountability with the clients, right? So TradersPost, the software that's been created, you can imagine, I would assume it's better now because of the hammering at the anvil of it constantly, day by day, and you're adding features and making it better in a way that you might not have done were you just doing it for yourself. Is that right?
Definitely, 100%. You kind of reach a point when you're building it for yourself, where you're just like, this is as far as I can take it with my own needs and my own experiences. And you need feedback from people to help kind of drive the roadmap. You need to understand what are all the different ways that people want to trade, and then kind of back into the product that you want to build from there, from that customer feedback. So, I mean, ever since we transitioned from a personal project to it becoming TradersPost, we've definitely been driven by our customer feedback for sure.
Perfect. Well, I'll say for myself, this has been my dream position. It's such an interesting thing in my personal life. I don't have retail traders or anybody who wants to hear anything about it, and so the Slack group for for the company has been a source of great joy.
Nice. That's awesome.
All right. So speaking of technical questions, since we have John here, I just wanted to bring up the maintenance that happened last week. I know that so there's a scheduled maintenance where TradersPost was down for 13 minutes or so, just in order to make some upgrades. Could you just let us know a little bit like what happens behind the scenes when that happens?
Yeah, definitely. I mean, this one was an upgrade that we probably really only have to do it maybe every 2 or 3 years, but we upgraded some core services. And unfortunately, to upgrade those services, we have to kind of do some preparation work that takes about an hour before we like kind of make the switch. And that switching process is where we have to basically take some of our services down. It only took about 10 minutes, and it's just no change from the user's perspective. It's just improving performance, security, and just generally kind of staying up to date with with all the software that's changing and moving forward around us every day. Just making sure that our software is up to date and secure, and will allow us to keep building the product over the next couple of years.
I love to ask because this is the problem I always end up in. Do you look at TradersPost or any projects that you do, and then you think to yourself, if I were to scrap this all right now, I'd start again in a completely different way?
No, software is iterative and organic, and it's a bit of it's like kind of a fallacy. You'll hear people talk about, oh, well, this software doesn't do XYZ, we should just start over. And like, there's a thing called the rewrite fallacy, where like everyone wants to like try to rewrite the software or like migrate it to a whole new language or a whole new platform. And it can't be like a big bang switch. You have to evolve the software. So if there was something that our software didn't do that we'd want it to do, we would try to iteratively evolve the software to that point. Usually trying to do a rewrite or anything like that usually doesn't work too well. That's the approach that I've always taken with building software.
That's the best answer. I thought I was worried a little bit that you might say, yeah, we're just going to turn it all into a no code, low code system and use Airtables and Firebase and get it all up and running within a week. So that's the answer you want from a CEO.
Yeah, I would think that if you were constantly trying to rewrite, one, you probably didn't have a good infrastructure plan to begin with, but also you might have a little bit of a case of the shiny new thing syndrome, where you really just want to play with some new technology that just came out, some new database layer or some new language or something, and you just really want to sink your teeth into it. I think that can be pretty dangerous to the long-term health of a software platform. And I think maybe John, is a perfect example of somebody who's suited for the role of building long-term software, because he was one of the creators of the Symphony, the
Doctrine. Yeah.
Doctrine specifically, but part of the Symphony team. So whenever you're making contributions in open source, you want to write something that's going to stick around for the long haul. And I think that probably led to your thinking there. Is that true, John?
Yeah, I mean, throughout my career, I've definitely had long tenure at every place I've ever been. I mean, I've worked on Doctrine and the Symphony open source projects for over 15 years. I think like my average time spent at a job is like 5+ years. So I've had the opportunity to see the result of my decisions. A lot of times people will join a company, they make a bunch of decisions, implement those decisions, and then they bounce out after a year. They never really see like, what was the effect of my decision? What did it look like? I made that decision when we were 5 people. Like, what did that decision look like at 20 and 30 and 40? And the decision you make at 5 people isn't going to be the right decision at 20 people. And like, as the problem changes and as the scale grows, you adapt and you change the way you do things, and you learn a lot by sticking around and kind of seeing the software grow. And I think it's a really valuable perspective that some people miss out on by jumping around from place to place. I don't know if that answers the question.
I think it does. And I've seen that ethos show up even in our conversations, where we'll work on a new product feature together, or even something that maybe I've contributed to. And I think your thought process is always on the shelf life of that approach. Like, is this the best implementation? Is this going to last a long time? And I think that's great for the health of the product over the long run, because then you're less likely to ship something that's going to cause an outage or cause somebody's trade to fail, or they send over an order request that doesn't quite get fulfilled properly. And particularly in this domain, we want to make sure that every trade gets executed exactly as you expect.
Yeah, and I definitely kind of will adapt my approach depending on like the software and like what it's being used for, and like my level of automated test required and like scrutiny to all decisions is much higher with TradersPost than compared to a simple like mom and pop e-commerce website. Like I'm going to be a little bit more relaxed, and maybe I want to say cut corners, but like, just the scale of the solution depends on the scale of the business and like the requirements. And it's nice to be able to kind of adjust the approach depending on the scenario. I don't want to, you don't want to build like your Netflix when you're not Netflix because it costs too much money, but you also don't want to sway too far to the other side where you're just cowboy coding and just cutting corners everywhere. You need to find like the right solution for right now and try to think a little bit into the future so that you don't kind of code yourself into a corner where it makes it really hard to iteratively and organically grow your code base. But if you can kind of strike that middle ground, it gives you flexibility. It gives you the ability to move fast when you're small, but then it still gives you the ability to adapt and grow the software as the business grows and not have to think you need to reinvent or rewrite everything.
Yeah. That last part being one of the key areas. And I'm glad that I didn't join the company as an engineer, because cowboy coding and cutting corners is like my forte. So
it can be a skill though, right? I mean, like knowing when is the right time to do it and like when it's safe. Certain things like infrastructure, you may not want to cut any corners because it's kind of like the foundation of what you're building on top of. But if it's like a experimental feature on top of all the infrastructure, then you have a little more flexibility to kind of like throw some spaghetti at the wall with low risk and just see if something works. And, if it doesn't, if it does, either way, you kind of learn something and allows you to move forward and take that experience with you on the next thing.
In my head, I always think of John as TradersPost.io and Mike as TradersPost.ai. That's the two separate things in my head, and they're always working together in this way to make things better. It's great.
nice.
All right, so let's move off to our first question for this week, which has to do with the pricing plan for TradersPost. And the person asks, does one strategy subscription in our pricing include paper brokers that connect to my broker for real-time data? So just to clarify, for anyone's watching this for the first time, being able to subscribe to certain strategies is one of the features for TradersPost. So, John, would you mind just explaining here a little bit the difference between the connections for a paper broker and a live broker?
Right. If I understand the question correctly, for the free account, you get one live broker. Like you can connect one TD Ameritrade broker to TradersPost, and you can have one live strategy subscription connected to that broker. And if you connect that broker, it counts. That live broker counts as your one live broker. And then you can have one strategy subscription with that live broker. But then you can have kind of as many paper strategy subscriptions as you want.
Perfect. So if someone connects you can have a paper trading account with TradersPost that is not using real-time data and that's delayed, right? And then for some brokers, you can connect that broker to the paper trading account so that those trades are being executed on real-time data, right?
Yeah, well, stocks are real-time data by default. Futures would be delayed. We don't have our own futures data yet. And then in order to get options support in our paper broker, you have to connect a broker that supports options. And then you can connect our paper broker to that live broker. And it allows our paper broker to use that live broker's data connection in order to get live stocks data, futures if the broker supports futures, and then options data, which once you connect a broker that supports options, then the TradersPost paper broker will also support options. And we hope to have our own market data in the future where we buy the data for futures and options, and then we can just have it available in our paper broker out of the box. but we just haven't quite gotten to that capability yet.
Perfect. All right. Thank you very much. All right. Next up, someone was asking, am I allowed to use automated trading with prop firms? So just to provide this caveat that we advise you to check with your prop firm regarding their rules because, and I do expect this question to come up to become more important and relevant in the future because the prop firm field is growing. The ability for retail traders to trade, to pass these challenges and trade essentially someone else's money in order to focus on executing the strategy, but not have to risk all their own assets, is growing. It's becoming far more popular. I know in my day to day, clients are constantly asking for scripts, and they want to develop strategies to be able to pass these challenges and to be able to generate income this way. So I can imagine that that we're going to see more and more of these questions come through in TraderSpost support, asking about integrating with prop firm platforms. But those platforms have their own rules, right? Some of them allow you to have automated trading, some of them don't. Others will make special exceptions. Some of them have very specific requirements for how you would set up the automated traded system. Because remember, you're trading somebody else's money. So we don't have a blanket rule for that. We just want to let you know that it is possible under certain circumstances that a TraderSpost might be the solution for you in order to trade with a prop firm, but we can't say one way or another if your particular account is eligible for that.
When we added the Tradovate integration, Tradovate is a really kind of one of the main exchange or brokers that people build prop firms on top of. So if it's a prop firm that's built on top of Tradovate, you can connect that account to TradersPost. There's no technical limitations on our side that would disallow you from connecting it, but like Tom said, each one of those prop firms has their own rules that they enforce that would be kind of separate from TradersPost. So they may, liquidate positions automatically based on their rules if you're, over your max allowed loss or something like that. So you just want to be aware of what those rules are. But from a technical perspective, you definitely have the ability to connect those prop firm accounts to TradersPost via Tradovate and send us signals from webhooks in TradingView or TrendSpider or your own custom coded script if you're able to do that.
All right. Have either of you ever considered trying prop firm accounts?
Funded
I don't think.
accounts?
Yeah, I've never actually asked.
I spent a long time reviewing DarwinX as a platform, but they're really kind of based in the UK. I think they do cater to a global audience, but for a while that was a real consideration for me. Some of the requirements can be pretty stringent, and personally, I have larger drawdowns in my strategies than I think a lot of those platforms allow. I think a lot of them are capped at 10% max drawdowns. And I'm comfortable with larger drawdowns than that. I think the crypto space really warmed me up to that. So a lot of my strategies are in the 20 to 25% drawdown range. And yet my CalMAR ratio is still much higher than that, in terms of overall compound annual growth rate relative to that max drawdown. So I think you have to be pretty careful that the best way to get accepted into those programs, of course, is that you tune your strategy to meet their risk requirements. And sometimes that just means like cutting your sizing in half. But by doing that, you risk not making as much on your strategy. So it's a trade-off. Is it worth, especially if you're doing prop firms with futures accounts, it feels like you're putting leverage on top of leverage because you're effectively borrowing somebody else's money to trade a leveraged product. And to me, it makes more sense to just manage my own capital if I'm going to use leverage at all.
Yeah, the great thing about futures is like you only really need $1,000 account to get started. Like you don't have any of the rules for pattern day trading, the settlement time. Like it's just much cleaner for algo trading. Where to trade stocks with algos, like you really do have to have the 25K. I mean, it's just much more difficult. I think the other thing with some of the prop firms is you're not actually, and this isn't the case with all of them, but some of them are not actually trading the real asset. Like you'll be trading a CFD in some cases, and the spread can be much worse on those. and I prefer to trade the thing that has the least amount of rules. It's like direct to the source, and not anything in between.
Yeah, that's fair too. I think you make a good point about the CFDs, because those CFDs are like a futures contract, but a lot of them can be much riskier than the regulated futures contracts that the CFTC is in charge of, and that you'll find on, the main exchanges. Some of them are fairly risky products and have incredible leverage relative to the leverage you would see in a margin account with like TradeStation or Tradovate, things like that. So those CFDs have me a little bit worried. Anybody that's comfortable trading them, but good luck to you.
If I remember right, too, we were just talking about this. Isn't there some kind of new regulation coming or something where CFDs are banned in the U.S. for U.S. citizens?
I think so. Yeah, I'm not very versed in what's happening in that space, but I have heard some rumors that they're going to try to regulate that a little bit further.
Okay. Yeah.
For me, what I found is that and I've seen this with clients that I've had. I know I joke around with this a lot, but there is a large kernel of truth to it. That the max drawdown I'm comfortable with is 100%, which is a problem. I would much rather lose 100% and have the potential of making more than not. And so I find the idea of passing the challenges that have these strict requirements to be training, right? If I can't do that, well, then I shouldn't be taking more risk, right? If I can't have a strategy that's not going to make me a lot of money, but I'm not going to blow up my funded account, then that to me is something I should try to do. So I think I'm going to be trying the proper account challenges just to prove to myself that I can do it, or to learn how to do it.
I think it's a good idea, Tom. Like, one of the, I think, early introductions I had into automated trading was becoming a member of the Quantopian community and building my own strategy that, rebalanced a basket of stocks based on some momentum factors. I learned about factor analysis. I learned about how to build a portfolio in an effective way. I tried different strategies, intraday and longer term strategies. But the key to it was that in order to be considered for their competition, you had to meet a certain set of criteria. And that criteria is what kind of forced me to think about how I was assembling a
Uh-oh, did we lose Mike?
Oh, I thought it was
strategy.
Yeah.
And in many cases, it's, did we lose connection?
For a second.
Yeah, let's just give it a second and you'll come back in a second.
Sure. Okay. So the main point is that it forces you to think about risk. It forces you to think about how your particular approach is managing risk overall, not only on an intraday basis, but over the long run. What are your max drawdowns? How is it managing subsequent failures, and so on and so forth. So I think it's worth doing just to learn that process, even if it's just a paper account.
Agreed.
It's funny. It's a good point, Mike, because like the process, like being process driven versus like results driven, is kind of like one of the main things about trading. And like, you have to be able to follow the process, and like just by being forced to follow someone else's process, for better or worse, is like good practice to become a good trader.
Yeah, I think so. I mean, I think many people, particularly with the way that they trade at home, would be pretty surprised if they were to land on a desk trade, or land at a desk at a prop firm that manages their own money, and they're allocated a certain amount of money to trade with. And then they start trading like crazy, taking a bunch of risks. And the risk manager calls them up on the phone, and they're like, yeah, you got to stop, like walk away from your desk. You're done for the day. I think if we all had risk managers, many of us at home in the day trading community, if we had a risk manager who was watching your account, we'd probably get more phone calls than you think. I think many people take more risks than they need to.
Isn't that supposed to be your wife? Like, your wife is supposed to be monitoring all your trades.
If any of us are lucky to have a wife who's willing to do that, then yeah. And I know when we talked to Brent, that was the agreement he had with his wife early on. I thought that was cool.
My wife tells me, it's okay, I know you can make the money back even if you get to zero. And I go, that is the last thing that I need to hear from you.
My wife is just always like, you're up, sell. She's just constantly just like, sell, 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 sell.
That's funny. My wife is the opposite. She's like, "Are you going to hold it long enough to actually make some real money?" Because I made the mistake of selling Amazon, and I bought a bunch of Amazon in 2012. And I was like, "Oh, I feel like Amazon's overvalued. I think I'm going to sell it here." And she's like, "Are you sure? It's Amazon.
That's so
Like,
funny.
why would you sell it?" So I sold it in like 2014 after 2 years. And
Oh, man.
it's another one of those opportunity cost situations.
Well, you never really know. So
All right. So next up here, something more of a technical question. Is it possible to offset a limit order price? And this is just within the larger idea here that I'd love for you, John, to address, where within the JSON payload, are there now or will there be any ways to any upgrades to that so that people can do math within it or have different variables or have more options to modify their strategy?
we don't have the ability now. And funnily enough, in a very, very early version of TradersPost, we actually had this capability.
Really? I didn't know that.
Yeah, it was before it was even called TradersPost. It was still in the Project X days.
Right.
For people who don't know, that was the name of the project internally, or not internally, just like for myself. I didn't have a name. I just called it Project X.
You hear that, Elon Musk? We were X first.
Yeah, this was way before Elon. This was pre-COVID. I called it Project X. But yeah, we had the ability in a strategy subscription. You could there were like basically some fields where you could configure math that would be applied to the price. But it was just really complicated, and for the sake of like simplifying the first version that I went public with, I decided to remove that capability. But now here we are. People are saying they need that capability, so I definitely see us adding something like that into in the future. But even today, you have the ability to do this on the strategy side. Just before you send us the price, you can do the math on your side, and if you're using TradingView, you can plot that value using the plot function and give it a specific name. And then that variable with that name will be available as a variable within the JSON that you can reference to pass that value to TradersPost when the webhook is sent. So it's possible.
That last part was a little bit of a mouthful. So to follow up on that, I'm going to write a blog post on it. It is a really good point to plot certain values, and then they become variables you can use within your payload. I'll write a follow up on that.
Yeah, and there's a really good, I think it's how to use a variable value in an alert. If you search for that, there's a support article in TradingView that shows you how to do that. But I'm sure Mike's blog post will be a lot easier to read than their lengthy help article.
Well, and it'll show how to construct the payload for TradersPost.
Right.
All right. So last question here along the same lines is someone was asking, is it possible to set a delay on my alerts in PineScript so that there's a minimum amount of time between signals I send to TradersPost? And this is absolutely totally doable. There is a variable within PineScript called time.now where the script knows what time is it on the server at the moment. You can also there's also other tricks, other workarounds where you can grab information from a lower time frame in order to be able to count out certain types of units of time. So there's multiple ways of doing it where you can actually set a buffer, not only for a minimum amount of time in order to a delay between signals, but all kinds of things, all kinds of different configurations you'd like to have time-wise. Now, as we've said previously, it does require some coding skills. And TradersPost is not a platform that insists that you become a coder. But if you do have that propensity, or you're happy to hire somebody else to do it, that possibility is definitely there for you.
There's another way to kind of like, that might arguably be a better solution to kind of work around that, is to always wait for the bar to close before you send an alert. So even if you're trading on the minute chart or the 30-second chart, you're always going to have at least 30 seconds or 60 seconds between signals. If you're not waiting for the bar to close and you're trading on the 30-second chart, like in theory, you could get a buy and a sell with like a second in between the signals. And like it takes longer than a second for TradingView to send the alert to TradersPost. TradersPost has to send the order to the broker. The broker has to send the order to the exchange. And it all seems like it happens like instantaneously, but in reality, like it can take about a second end to end for like everything to happen. So you always want to leave enough time in between your entry and your exit to make sure that the entry is done and filled before you're trying to exit. And I think it's a common problem that people run into is where like they back test these strategies, they get in and out every second. And in a back test, that entry and exit is happening instantly. Like there is zero delay. So that strategy in the back test can look great, but then when you actually try to execute it live, it just like it's like trying to sidestep physics. Like it's just not going to work. There's no way to ever execute it fast enough to match the way it's executing in the back test. But waiting for the bar to close, I feel like is generally a pretty good rule to have.
Yeah, maybe to add to that, I think the scenario where this gets a little trickier is on higher timeframes, but you want to follow up with a take profit and stop loss order after the entry. So if I'm on a 2-hour chart or a 4-hour chart or something to that, degree, maybe the question is, how can I send my entry, but then on this 2-hour time frame still be able to wait a few minutes before I send my take profit and stop loss signal? And I think Tom's advice around the time.now might help, but you'd have to write something pretty custom there. And I know, John, you and I have kicked around the idea of maybe allowing people to incorporate multiple orders in a single payload, and then we wait for one to finish before the next one executes. Right. So there could be a product opportunity there for us. In the meantime, it is a little tricky, I think, on higher time frames, unless you had another idea there.
No, I mean, I think on higher time frames, like if the goal is to like avoid having conflicts between like the timing of signals, like that really is only a problem on the really, really low time frames. Mm-hmm. But on higher time frames, like if you're on the hourly or 2-hour chart and like you get a signal in the first 5 minutes of the second hour bar, like that's not a problem for your strategy. Like there will be 80 minutes or 70 minutes in between the entry and the exit. So yeah, I think it would really only be applicable on the lower time frames to kind of work around potentially not having enough delay between the signals.
Yeah.
Excellent. Okay, well, those are all the questions that we have for this week. I think that's a pretty good discussion. A lot of information there that's useful for people who are new and long-term TradersPost customers. So very happy to have both John and Mike here today in order to address a lot of these issues. And we're going to get John again in the future. But not every time, because I don't like when people cut into my time and talking, and this is my time to shine.
I want you to shine, Mike. That's why you're here. We need you to shine.
Excellent. So we'll see you again next week. Again, if you have any questions whatsoever, you can send them into support tickets. You can ask them on Twitter. You can put them on Discord, and obviously we'll answer you there. But we'll also put the information here on office hours to help the entire community. So any last words from anyone before we leave for the week?
Have a great weekend.
Yeah.
Fantastic. And, Bitcoin is going to, I guarantee, is going to hit 100,000 by this weekend. So buy as much Bitcoin as you can. No, I'm just kidding. No, not financial advice.
Win moon, Tom. Win moon.
Are we going to have a Halving party on Slack, I think, in 2 weeks or next week when the Halving happens?
That sounds fun.
We all get our GIFs.
Depends on which direction it goes.
How many halvings have been nothing burgers though? Like there've been
I
think all of them have been pretty flat.
Like immediately, but like at least afterwards, but immediately, yeah.
Sure. To where I question whether it's correlative or even causative, really. Like, is it really relevant, or is it just more momentum from the market after the fact? We all believe that a halving is important.
Every crypto group I've been a part of, I've tried to tell them that the halvings just happen to correlate with liquidity cycles. and they look at me like, I don't know what you're talking about liquidity, and I go, okay, fine.
All right,
Whatever.
we need to make
Go.
a workshop for that, Tom.
Exactly. All right, folks. Thank you very much. We'll talk to you soon.
Cheers.
Yeah.